So I want to launch this podcast by doing something a little bit different. I want to tell you all a story about the long years that I've been in real estate. So in 2014, maybe the early 2015, the property market was at the beginning of a boom and it started moving. I don't know if you remember this, Sam, but it started to kick and there was a bit of energy and we saw sort of 10, 20% price growth. And all of a sudden, economists and people started coming out saying, the market's running hot, affordability is a big issue, we're going to see a crash, it's a property bubble, and it's going to crash anytime now. You should anticipate 20, 30%, maybe 50% decrease in prices. And for me, as a new person in property, that made me very, very nervous. And that nervous energy was felt by more than just myself. It was kind of everywhere. And it was interesting because it scared a lot of people from jumping into the property market. It certainly made me pump my brakes and look at things a little bit more carefully. However, after that, the property market pumped for another sort of 2.5 years, nearly 3 years. It jumped by another 20. It jumped 20% annually. So each subsequent year jumped by 20%. And that taught me a crazy lesson about not necessarily listening to public opinion or economists or, the so-called property experts. Do you remember that time, Sam?
I do. I actually do. And I remember people telling me at the time, don't buy now, it's going to pop, And I'm like, when is it going to pop? You said it was going to pop 6 months ago. It's not popping. It's actually still popping. You know what I mean? So I remember that vividly in 2014, 2013, 2015, around those few years, sales were going through the roof. They were my lucrative years as well. So, and it never really popped. Like, it cooled off like it always does, but it actually never popped. So yeah. So is that what they're saying now? It's going to pop again? Is it?
No, I feel like it's going to happen soon. I feel like already people are talking, is the boom over?
I think.
No, you guys say if you want to get Dom. In your experience, or both of you actually, funnily enough, I get heaps of questions from my clients as well, saying like, if it does crash, or if we fall into a trough, or it dies off. In your experiences, when the market has crashed, even though it may not have, as what people talk about, what actually happens in that period? Like, not what should you do, but what can you expect in a lull period?
So, over to you, Sam. What has been your experience as the cooling off, or the biggest pop that you've seen, or the biggest downturn that you felt to experience? So, what was the market like?
I just saw prices. They went stagnant. They became stagnant. So things actually did dip, but they didn't heavily dip where you've lost, hundreds of thousands of dollars. I did see that there was a correction period where it actually made everyone, stop sweating. Maybe gave people that were wanting to enter the market to get the confidence again to start looking and to buy again. But to be honest, Louis, it's hype, and when things did cool off, they just come back up again. It waits for a time, and things just creep back up again. And I think that's generally across all investment markets. But I think with property, it's just never heavily crashed unless it's 1990, 91, where interest rates were 20%. But I feel like, in my experience, something always happens for a reason to cool off. So, we had that GFC, then we had COVID. These are really big, significant market, changes, and I feel like properties do affect it. But it only takes some time again, and things start to creep back up, and people get hungry again. So
it's funny, the cooling off stage, for me, I haven't really experienced anything bad. as you're saying, COVID coming out of 2018, 2019, the market slowed down a lot. There was some price discounting. Properties weren't turning over as quickly. There was less people around. But it's funny because when things are stagnant, no one wants to buy.
Yeah.
And even though you know that this is a great market, no one wants to listen to you.
Yeah.
Because when it's rising, you're like, hey, it's rising. You should be buying before it gets too hot.
Yeah.
And then when it's at the top of the market, no one really recognizes it's the top unless you're really in the game. And then once it starts coming down and it's nearing the bottom, people don't want to buy because they're scared.
Yeah.
So there's so much fear in either the rise or the decline. There's always fear in the market, and it's about managing that fear, really. Do you guys think it's going to pop anytime soon? Or the market's going to come off?
Look, I honestly think things have to cool off because they are racing at the moment. But what does pop really mean? What what does it really mean? Things have to slow down. They eventually will, but right now it's just too. It's just too racy for things to just be a big handbrake, because I don't think that's just going to happen overnight.
Well, yeah, like any economic market, you have like peaks and troughs, as I sort of said before, and correction phases and whatnot. Obviously, it's going to slow down. But I was this morning, I was looking just at a general graph over the past, say, 30 years of what the markets look like, and it just seems to it's pretty straightforward. But it just seems to go up, correction phase, up, correction phase, up, correction phase. There's not this real stagnant downhill turn, lose all your money, then you're gone. It just seems like when people have gotten in, they've reaped the benefits of getting in. It might have been within 2 years, it might have been a quick turnaround, or it might have been within 5 years. But I don't think there's any to what you're saying, Dom. I don't think there's any bad way to be buying. Obviously, we're going to be in a correction phase maybe soon, but if we're not in one right now. But I don't think there's a bad time to buy, if that makes sense.
I agree with you. Like this isn't like cryptocurrency or shares where, the CEO sleeps with the secretary and then the value of the shares half. Your property, someone wants to live in it. Someone wants to buy it. There's always, that nice street, that nice tree, that nice, the proximity to the beach or proximity to woodies, whatever. Someone always desires that because we all need a roof over our head, but you don't need new AirPods. And Sam needs new AirPods because he put his in the wash today, but that's a story for another time.
They're in a bowl of rice.
But back to the point where you're saying, the economists now are saying that the boom is slowing down, and just a bit of facts and figures. So the reason why they're saying it's slowing down and why we might anticipate a slowing down of growth. So it's still going to grow, but not going to grow as fast as it has been. It's probably not going to have the same record months, is because we've noticed that first home buyers, there's been less in the market. That's from the ABS. We've noticed that wage growth isn't keeping up with the price of property. And just very fundamentally, what that means to the listeners out there, banks have a simple calculator. They say that you can borrow between 6 and 7 times your earnings. So if you've got $100,000, you can go and get, between $600,000 and $700,000 worth of borrowing. If wages don't grow, then you can't keep on lending that amount. But the other thing is more supply. And what we anticipated was that, the property market starts to move and a lot more people are interested in selling their property. So more supply coming into the market with the same level of demand means that, prices aren't going to grow as fast. However, I don't think this is going to stay forever, and I actually really do believe the boom is going to continue.
I just want to put it out there that if we're in a boom without any international demand, our borders are completely closed. What is going to happen to the housing market once our borders reopen and we start creating these bubbles with certain countries and Australia becomes the next hotspot to be? The market at the moment is running between us and ourselves without any other players. And I'm talking about overseas players. So what happens when our borders reopen, students come back into the country, things are going to rise again. Things aren't going to fall off. They're just going to get hotter. So if you're worried about not buying in a boom, that's okay. It could be a legitimate reason. You don't want to buy in a hype. I get that. But what right moment are you waiting for you to buy? Like, it doesn't make sense to me. When my clients say to me, "Not ready to buy," dude, when are you wanting to buy? If not now,
What are you waiting for?
Yeah.
I think that I thought of this the other day. A good, I don't know, a good projection maybe to what it might be like when the borders reopen is that when internally Australia's borders open, Queensland became this, this golden place because of how they handled COVID. Like they seemed like they kept everything open. Obviously, probably New South Wales handled it maybe second best. Victoria, obviously, the had the most detrimental effect with their lockdown. But everything internally, Queensland became really hot. Everyone wanted to go to Queensland. Everyone had the attempts, or the desire to move to Queensland. They handle it brilliantly. We can move on. But I think that now, if you look at the other countries in the world, the way Australia handled it and the way we've bounced back from it, you can only think good things of them, having the dream of moving to Australia now. If we go into another pandemic or something else happens, they've handled it, if not probably on par with the best of them in the world.
I completely agree. And let me just pause for a second. Sam's washing machine or something's going off. Do you want to go turn that off? So,
1 second.
But yeah, Louis, I think that's the perfect anecdote, actually, because it's funny you say that. What we had a look at the most recent data for migration, and Queensland received everybody. Everybody left Melbourne, everybody left New South Wales, and everybody was going to Brisbane, to the Gold Coast. It had its largest migrationary numbers ever, and the property prices have been starting to really increase. So that's a natural demand just internally. And I think you've said it perfectly, that once Australian borders open up again, what the hell is going to happen to property prices? You've got students coming in. They want apartments to rent, and some of them have very rich parents that want to buy. Migrants coming into the country, they're talking about lifting the cap on migrants to get it back to normal rates. They all want apartments. They all want affordability. They want Australian property. And then you've got tourism. So tourism's interesting because they suck up all of the demand for apartments and houses and stuff through Airbnb, bookings.com. And what that actually means is that the vacancy rate so the vacancy rate's currently between 1% and 3%, but that's going to become near zero because all of these properties are going to get sucked back up. Rents are going to increase. And if rents increase and the yield goes up to 4-5% for a Sydney property, it's going to make an incredible investment.
And it's funny you say that about this tourism, because an article was released this morning saying that the borders are going to open sooner than we know, because there's actually a target that's being set by the government for the total amount of vaccinations that need to happen before they do so. And they've admittedly saying that they can't keep the borders closed forever. So this isn't a 3-4 years away borders. I generally think it's going to happen within the next 12 months. So if domestically we're going to slow down, there's going to be another gush, and there's going to be something else that's going to heat up the market. And I feel like that's going to be the next influx of demand to come through.
Another gush, technical term.
What a good word.
Yeah, we'll use gush in our next sales pitch.
Is that a bad word?
No, I like it. It. It's gushing. The property market's gushing.
Yeah.
I was talking to one of Tiffy's clients. He's a young man and he's from Colombia, and he came here about 5 years ago, and he's looking to buy, just pick up some house and land packages, and he's looking to do it really quickly. But he said something pretty funny to me, which now I sort of resonate with and realize that there's a different mentality to say what we have domestically in Australia. I said to him, yeah. I tried to tell him the stats of why, and maybe not a regional, maybe 40-minute town outside of a CBD, really cheap house and land package is going to grow. and he didn't really have to be convinced or told to, because he said, he goes, Australians don't believe that their country's just going to keep growing. He said, which he gets, because we're a baby population in regards to other really populous countries out there. But he said, you guys are just going to keep growing. And he said, you guys are just, people can't wrap their heads around in Australia. They don't think that the population is going to stay the same. He said, yes, it is effectively slow, but he said, you guys are just going to keep growing and growing and growing because people are going to keep coming. So what that does to I guess property prices is I guess inevitable. But it's weird how we can't think in, to us as Australia, that we can't see it happening, but it is going to happen. I mean, the stats are there.
Well, I see it happen as, a Melburnian living in Sydney, where I see everything so tensed, and then I go to Melbourne for the weekend and I think, wow, Melbourne's actually pretty spacious. It's pretty spread out, We've got so much undeveloped land. So we've got farms 30 kilometres out from Melbourne CBD. There is no farms 30 kilometres out of Sydney, and that's good context. You've got 70, 80 kilometres now. So, and we're not far off in terms of population numbers anyway. So definitely there's room for growth. And Melbourne is going to be the next hotspot. And it's going to make a lot of other capital cities redundant with the way it's going to perform the next 3 to 5 years, and that's due to its population growth. But
I really love that analogy. Sorry to cut you off, Sam, but I do love that analogy. Like, the fact that the value play in Melbourne, 30 kilometres, you can't find farms in Sydney at 30 k's out. And then the second one, what you're just saying, Louis, about the Australian economy, the Australian people and country, it's so young that many people can't conceptualize what life will be like in 50 or 100 years from now. I know this is getting big, but even 10 or 20 years is too hard for people to conceptualize. And when you guys are both very well traveled, you've been all over the world and you've been to older, more established cities and locations, and you can see the density, you can see that how cities evolve and how they change, and the prices over there are crazy.
Yeah.
Like Manhattan, London, don't get me started on all the Chinese huge cities that are over there. Like, it's just crazy, and people can't accept that Sydney prices will keep on going and the fact that they're exponential, but they are. It's as simple as that.
And the government always supports sustainable growth as well. Like, the government's always going to put, obviously after the GFC and we learn from mistakes, I guess. But I think the government's always, or our government especially, is always going to put defense mechanisms in play, not to see massive crashes anymore, or not to see huge downturns. They put incentives to boost it, and that worked. The home buyers grants, stamp duty concessions and whatnot, and that boosted it. They might tailor off the concessions to let it correct, but our government's always going to try and push our economy in, I guess, the correct direction. It's not going to let it have complete crashes like other countries in the world, where you wake up the next day and the bank is you no longer have any cash. Or it's been halved in price because of cash rates and whatnot. But I think that in buying in Australia and investing within Australia, I think it's, if the government's projecting sustainable growth, or that's what they want, well, then that's what you're probably 99% going to get.
But it's also a function of where we play as a business, right? And how we try to invest. If you have a look at all the stimulus, it's incentivizing, so that the federal budget's put out a new stimulus that, there's 10,000 new applications for 5% deposits, but you've got to be a certain income level, blah, 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 allowing new first home buyers to come in again for the super, and then single parents earning less than $125,000 can get in with a 2% deposit. So what the government's doing is stimulating the bottom part of the market, and it puts a natural floor on how low a price can be, because people always want to enter. And if you're playing around the entry level prices, they're not going to halve. They're not going to drop by 20%, because there's always someone ready to pick it up, because it's the most amount of affordability. If you're playing at the top part of the market where you're buying a $4 million place or a $10 million place, that can conceivably come down $3 or $4 million. You know what I mean? Because that's a lot of discretionary spending, and there's way less people that can afford $5 or $10 million. Whereas if you're buying a $450,000, a $600,000, a $700,000 property, there's always someone behind you that wants to buy that property, and not to mention the government is incentivizing 30,000 people to go and buy that type of property. You know what I mean?
Yeah.
It's like, I mean, it's always the saying, low risk, low reward. But I think that you can pick up some really nice rewards for little to, I wouldn't say no risk, but little risk if you do it right.
And what do you guys think is going to happen over the next 12 months?
My prediction is the market's going to keep running until about towards the end of the year, and then we'll see some corrections happening Q1, Q2 of next year, or mainly Q1, and make people feel good about getting back in the market. And don't worry, it's still affordable, et cetera, et cetera.
What kind of correction so you're saying it's going to run till the end of the year, and then what's a correction in your mind?
I think a correction is going to an auction and still buying. There's still a level of healthy competition, but still buying at a reasonable price without paying what we're seeing now, 300 to 500K above reserve.
Right. So just to be clear, your correction is paying a normal price for a property, not it being 20% above.
Well, I just think there's going to be, whatever normal is, but I just think it's going to be less hyped.
Okay.
Of running.
Some people think corrections like 15% discount.
No. Oh, you're not going to get discounts. There's going to be no discounted prices. You're going to be buying at whatever the market is telling you they're worth, but there's going to be less pressure and less heat. That's the correction.
Okay. What about you, Louis? What do you think is happening in 12 months? Over the next 12 months?
It's interesting. I think I'll probably, if I repeat Sam, I'm just going to repeat Sam, but I believe the same as him. It's funny though, because if you look at what you and Pete predicted at the start of COVID, you two are probably the only people that had confidence in the market, And so if you look back at that correction, everyone thought the world was going to end last February or last March. And with the right, we bounced back okay. So I can't see why a correction phase is in the negatives at all. If not, as what Sam said, I think that there'll be less, there won't be as many buyers out there pushing prices exponentially, but there's still going to be definitely competition when come late this year.
So just to summarize, if I've heard you both correctly, you think there's going to be price growth until the end of the year, and then there's going to be more price growth, but slower growth next year. Slower growth, not a price decline.
I think it stables out a little bit. When I say stables out a bit, I think that areas, like pocket areas, will still run. And the media, as I've said before, the media can manipulate statistics pretty easily. They can say, oh, there's only been a less than a 0.5% growth over the past 3 months, blah, 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 blah. But, what areas are they analyzing or what areas they're looking at? I think that there's still going to be some areas and pockets of growth that they can grow as predicted, that 6 to 8% over the next sort of year on year. But you have to be very particular with those pockets because they're right that you have to leave a bit of room to grow. But as we've talked about before, like the urban sprawl, if the areas that have grown already, that they stabilize, then they stabilize and they become, not as hot anymore, well, then the affordability gets pushed out again.
Okay. So we're still seeing some opportunities in the market. I agree with both of you. I think price growth is going to slow down. We're still good. But I also think that, as you've just said, there's going to be pockets where some markets are going to go crazy, others are going to slow down. And I really, really do believe that the affordability part of the market's going to run the hardest. So anything of less than $1 million, I'd say less than sort of $900,000 over the next 24 months is going to run very, very hard. And I think at the end of the year, it's a lot of the more expensive stuff will start to slow down.
Mm.
Peter and I always talk about, I think apartments are going to be the next thing to run. And that's going to be a really interesting thing when that happens, especially when, migration, tourism, and all that kind of stuff kicks back in.
Well, look at Canberra at the moment. Over the past year, their apartment stats, I believe, have outrun the housing stats. So
awesome. Well, this is a new format. A bit of a chat around the table. Sam laughs about it and calls it the view for Wealthi. I hope you all have liked it. The people that are listening out there that are watching as well. We're going to be doing more of these more conversational tones and maybe inviting a fourth person to the chat. And as always, thank you two fellas. Is there any sort of closing remarks or thoughts?
We'll probably get Whoopi Goldberg in the view next.
Ellen's looking for a new gig. I heard she was quitting. Anyway.
Awesome. Okay. We'll see you guys soon. All of you out there, any questions, thoughts, opinions, send it to us. If you want to hear what we have to say, or if you want to hear any topics, hear us talk about some certain topics, send them through. And be well, keep investing, and we'll catch you all soon.